It's Sunday, the 24th of March 2019. I wanted to do an update of a few of the gold stocks that I've been following in these videos now for quite some time. I'll just do a quick run through. There's been a bit that's happened in the last 6 weeks since I did one of these. Most notable thing that's happened in the last week was St. Barbara releasing a announcement here about their feasibility of their hydraulic pumping option to transport ore from deep underground at Gwalia. They've sort of basically said in this announcement, they're reassessing that, and it's not viable to do that. And they'd sort of given the market, I guess, guidance that that was going to be the option when they'd done a scoping study for this. So I thought this announcement was a good idea, a good sort of example of, it's sort of what is not said here, and there's a few sort of words. When I read this, sometimes when you read something, it's the first couple of minutes where you can get an idea, you see a few words, and there's a lot of technical detail, a lot of technical uncertainty here, and the market hates that. When I read it, I thought this is going to be probably a bad day for the share price. Didn't realize it was going to go down 30%, but when you see sort of a lot of stuff, a lot of technical uncertainty, the market hates technical uncertainty about ventilation. What's the mine plan? What are costs going to be in the future? There's just not a lot here. 30% probably is a bit of an overreaction, but in the short term, it's probably likely the share price is going to continue to be under pressure. Maybe it has a bit of a bounce here, but there's too much technical uncertainty, especially with Gwalia being such a main, a huge portion of St. Barbara's production, and it's much better than Simberi, which they were trying to offload. This was one thing I've pointed out in these videos, is that a lot of these mid-cap producers, or what were formerly mid-cap and almost become large cap now, and that's the category I'd probably put St. Barbara, Saracen, Northern Star, Evolution, Regis. All these stocks have had extremely good runs in the last 6 to 12 months, and now the risk has been to the downside since mid last year. And particularly St. Barbara, I thought the main risk was probably a risk that they do a extremely dilutive takeover offer for another company, and that would dilute the shares and push the share price down for St. Barbara. But obviously this Gwalia risk was huge too. That's an extremely technically challenging mine, almost 2,000 meters deep. So it's just an example of the sort of things that can come from around the corner, and this is why you don't want to hold these stocks at very high valuations, because when risk happens fast, as they say, and that's you're not going to be you've seen all the last 6 months of gains there. If you bought in at the lows, wiped out pretty much immediately within the first 10 minutes. Probably it was down to 350, I think. So yeah, you don't really have an opportunity to sell, I guess. One thing I thought, and some people were saying, this is probably oversold, it'll have a bounce back. My experience has been that these are not. You're probably better off not buying these major sell-offs, particularly if they're driven by technical risk. And what I mean by technicals, I mean engineering challenges and physical challenges of mining. That's the real problem. And when companies have had that, and the market questions, how they're going to turn it around, it's probably going to be under pressure from shorters and this sort of stuff. And one example of that I had was Regis in 2014 and 15 had some major issues with the grade and metallurgy at their Garden Well deposit, and also had a major problem with a tailings dam failure. I can't remember if the tailings dam failure was here or here, but I think it might have been in 2014 they had the tailings dam failure, and this move here was the sort of a technical uncertainty, I guess. There was sort of some vague announcements, and I was buying the stock here in this these low, sort of like $1.20, I think was the first time I bought down here, and sort of held it for quite some time and rode it along the way up here. And that was a good move, but it was also in a different gold price environment. We know the stock had been marked down massively, and they'd been good performers, so that was a value play, and it's a bit different from St. Barbara at the moment. The valuations been at were very high already. So now you've got the technical challenges as well to add into that. But I'd say there's, like, if you see that those moves down in the Regis share price lasted, I I think that the share price was probably down similar there, about almost 25 or 30% in that 1 or 2 days, and then it took 6 to 9 months to really bottom there. And I think you probably could see something similar from St. Barbara. Basically, there was nothing in this that they said they had a plan past the next 2 years. It doesn't mean that they're not going to be able to mine there or anything, but it's just, while there's technical uncertainty, it's probably going to be a hard road back up. Saracen was another one that in the last few weeks has just sort of fallen out of bed, and that was, I talked about this I've been talking about this probably the last 2 or 3 videos when I've mentioned Saracen. Their valuation had really just got out of step for where their production is and where the reserves are, and their growth profile. They're a good producer and have done very well to get where they are, but it's kind of run ahead of itself, I think. And that's in the last 2 months, you've kind of seen the share price fall quite a lot from the highs. It got up to almost 350 there, which is kind of ridiculous valuation wise. So that's another one I've sort of been warning about. Northern Star is in this category as well, and we've seen they had when they announced their first production results, I think from Pogo, they had this big fall here. They're still trending up, and they're still sort of the darling, but there could be, I reckon they're one more announcement away from another sort of sizable move down if they can't show that Pogo sort of turning around. And mainly this is because the market reacted so heavily when they acquired that mine. It was only $7. It gapped up to 760 there, and had a good run up to almost up to more than $9 in the next 3 weeks. So this is I think the stock is extremely highly priced here, and you've just got to be a bit cautious that something like what St. Barbara's had is possible. So that's just a warning on that. What I've been saying is that the place to be is sort of in these mid caps. They were trading on low valuations, and probably not with the same. They've got problems, but they're not. Those problems are already discounted in the share price, so they've got to have better exposure to the gold price, which is Perseus is one of those. I don't hold this anymore. I sold out sort of early 40s because I just sort of, I guess I look at production reports and don't have much confidence in them. I'd probably struggle to see the stock going considerably higher in the short term. It's breached this sort of this same level as it did in 2018, around this 50 cents. I don't. Their production results weren't stellar last quarter, and I'm not sure if they will be again either. So I'm not completely bullish on that, but I think it's an example of where those have been the place to be in the last probably 3 to 6 months. These stocks. Ramelius is one that I bought into about 50 cents, and I think the stock's sort of got a little bit detached in the last week, and I sold out all my shares on Wednesday, Thursday, Friday, because I think it's just doesn't really make a lot of sense, this move, in the sense of their growth profile is okay now, and they've got the EXU takeovers sort of been bedded down and all that, but this run is kind of ridiculous here, and I think there's sort of passive investors, passive trading from the GDXJ and also from the ASX 300 entry that may have something to do with this, but I don't think the stock should have this sort of market cap and valuation just on its. It's profitable, and they're a pretty good producer, but their reserves are light, and it's just, there's a lot of risk here. I guess that's all I'd say. And there's production reports coming out next month. They'd been guiding to sort of a weaker quarter, I think. So you just got to be a bit cautious ahead of these production reports after stocks had this sort of run. I've seen it many times where they have these good runs on just flow of funds into them, and then a production report will knock it down. So just be aware of that. And it's not people, even though the market should be aware that production report's coming and might be not that great, you just got to be cautious. Silver Lake's another one that's had a good move, very, very similar to Ramelius, probably not quite as strong a move, but they've, I'd probably favour them at where they are compared to Ramelius. Looks like the Dore takeover's been finished off as well, so they'll be happy they got out of the way. The other one, Gold Road's another stock where I've it's been doing very well in the last couple of months. So I've been buying the stock sort of between 60 and 68 cents, I think, in this period here. Got my average to about 66, and then sort of it's had this tremendous run just as the money started to really flow in here to the stock, big funds buying it ahead of production. Again, I think the stock is pretty much close to full value now. So now I'm sort of, got my caution indicators on, then I think this could be, it's probably getting toward a point where I'd sell out. The key is here that there's the production risk is overly discounted, and then it isn't discounted at all in the share price. So when it was 60 cents, the market was pricing in too much risk associated with ramp up and production and costs. But the stock's up 60% in 3 months, and there is still risk to production ramp up. And we see this all the time, because the other stock that I've been quite bullish on for a long time is Dacian, and they're coming out tomorrow with a revised production guidance, which I sort of warned about. And that's another one where that's sort of indicating where Gold Road could be. If they have a 1 week number that misses guidance or something, that's the sort of thing that knocks the share price 10%, straight away, which is probably what will happen with Dacian tomorrow, depending on how bad the downgrade is. That's been a little bit disappointing, and I think it's more about their ability to manage expectations here, because I don't think they needed to be as aggressive with their production guidance. And I don't think the market would have marked them down considerably if they'd just been a bit more cautious, probably at the start of the year. The upper end of their production guidance was plainly ridiculous if you looked at the mine plan. So it's, I don't know why they were so aggressive. They probably just wanted to, get on the good side of the market. But when you don't hit the expectations that you've created, then it creates worse problems. So, this has been a standard story. And I've been talking about this on the Perseus chart for a long time. So, that's a sort of, depending on how bad that announcement is, it could be a buy, or it could be a sell. If there's terminal problems with grade and this sort of thing, that would be a concern. But I don't think the way the underground is performing didn't seem to indicate any major issues. Probably the open pits where the issue is going to be. If there's any continual any indication of continuous problems, then that'd be a concern for me. So that's kind of a wait and see, but a bit disappointing. West African Resources, another stock that I've talked about extensively, had a very nice run in the last probably 6 weeks, and looks like this could be shaping up for a nice move here. Obviously, they've got a new feasibility study coming out. It's due this week. Probably it'll come out. Maybe it's a week or two late. Who knows? But the stock's been rallying in anticipation. I expect that to be a very good update to their project. And the stock was already undervalued in my mind. But now at least that sets a new benchmark for the valuation, the fundamental valuation of the company that the analysts can use. But there's very good chart action here. You can see good funds come, good flow of volume, sort of those high sort of 2 million a day, clearly sort of continuous buying, and then a lull as it sort of settled after that initial move, and then the volumes come back in. So that sort of suggests that you could have another, it's sort of broken above that 29 and could have another run of, say, 6 or 7 cents like it did here. So that would sort of take it to that mid 30s. That's sort of the sort of rule of thumb after you've had that consolidation, that mini flag sort of pattern. But obviously, it depends on how much of that's been in anticipation of that revised feasibility study coming out this week or soon. So they're the main ones. There's a few others that are sort of I still follow. Echo, I still hold this. They're expecting a feasibility study soon as well. I think that would be probably a reasonable update. The gold price is really helping them, and the advantage they have is obviously an existing plant. So that should be positive for Echo. I think that feasibility study, but maybe again priced in. But I think they're very good exposure to a rising Australian dollar gold price, which is kind of my basic thesis, and that sort of helps these small near-term developers. Capricorn Metals, just a pretty difficult stock to hold and follow. There's a lot of corporate problems. sort of these corporate sharks have now taken over. Project sort of looks like it's a good project, but you can't really work out what the game plan is of everyone here. Regis sitting in the sort of the wings after their first sort of rejected takeover offer. So maybe they come back, maybe they don't, but it's just a bit of a disaster. So I only really hold the stock for the because I think it's undervalued here, and I don't like any of this corporate stuff, and it's just painful to kind of follow. And so that's sort of annoying, but hopefully fundamental value eventually shines. Cardinal's another one that's basically just comatose. There's no flow, no stock traded. Trades at what's that, less than $50,000 a day it's trading. So I think it's extremely good value here, and it's sort of that if the gold price were to take off past sort of say 1400, 1500. Projects like this, there's not many good projects of the size and scale of what Cardinal have, and their valuation here is sort of getting back down to, I think they're like sub 150 million market cap now for almost 5 million ounces of reserves that are pretty good. I think $750 all-in sustaining costs, and their feasibility study's due in, I think, in the third quarter this year, so around September. So I think they're another great stock for that long-term gold exposure. They don't have that good run, but if a stock like this it's a sort of thing. If they get an offer from Goldfields, for example, who are holder of almost 20% of the shares, to do a joint venture, for example, I think that you'll see the stock double kind of thing, and that's there's been multiple companies that have done that. And we saw Newcrest make an offer for a big portion of a large mine in Canada, and the stock price that they can't remember the name of the company off the top of my head, but that I think it was the Red Chris mine in Canada, and that stock was up sort of 75% in a week when they took their position, because it takes, I guess, in this sort of market, which is pretty poor for developers, it takes there's not enough speculators to kind of drive the share prices, so it takes the big producers to really set valuation of these stocks, and only really they know what they're worth, and that's kind of based on the lack of reserves and high costs of some of these larger producers, so they know what they need to replace and know what and have the technical nous obviously to recognize what's a good deposit. So I'm still a holder of Cardinal, and I continue to accumulate here. I think it's a great stock to hold for that long-term gold exposure, and I think the project's just hugely undervalued. So it can keep going lower, but I think the trading at these levels is kind of seems almost artificial, like it's just trying to game it and push it down lower and lower. I don't believe in conspiracy theories necessarily, but if you would try and set the game the price of any stock, probably this one's about the easiest to do it, just because there's no volume, no liquidity, so it's pretty easy to create this sort of false narrative and then get people gradually selling as they get sick of it. And I think that's kind of the long-term game. So you've got to be out until you can recognize value in these companies. You probably are more likely to get shaken out by this sort of rubbish trading. But that's kind of an aside. So all in all, I think that's what I'm feeling at the moment, and I'll do another update in a few weeks.